Good morning, ladies and gentlemen, and welcome to the Lms Capital Plc 2022 Annual General Meeting. Throughout this recorded meeting, attendees will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question at any time and press send. The company may not be in a position to answer every question it receives today. However, it will review all questions submitted through today's meeting and publish those responses where it's appropriate to do so. I'd now like to hand over to Managing Director Nicholas Friedloss. Good morning.
Thank you. Ladies and gentlemen, I would like to welcome you all to the 2022 Annual General Meeting of Lms Capital Plc. Robbie Rain, who normally chairs this, and I'm sure would like to have done so today, has unfortunately been called away at the very, very last minute on an urgent family matter. So I'm standing in for him today. So thank you also to all of those of you who've connected to this meeting via the webcast. The registrar has informed me that we have a quorum, and I therefore declare the meeting open. I'm delighted that we're able to at least begin welcoming people back face to face to this meeting this year. Although, as you know, that the proceedings are being broadcast using the Investment Company platform as well. I should point out that the participants joining via that electronic medium will legally be observers rather than participants of the meeting. But as was said in the introduction, you're very welcome to submit questions, and we will try to deal with those. All votes at this year's meeting have been received by proxy only. We've received a small number of questions from shareholders, I think, ahead of the meeting. And we'll come back to those and deal with those as we go through. We're very happy to discuss all areas of the company, actually at all times. This meeting is not necessarily the easiest forum in which to do so, and I frequently have calls and conversations with investors. Very happy to talk to you at any time you'd like to reach out to us. So let me, having dealt with those introductions, now I'd like to introduce our board, and I'll work from this side. So sitting to my left is Peter Harvey. Good morning. Peter is chairman of our audit committee. To my right here is Jamie Wilson. Good morning. And on the far end there is Graham Stedman. Good morning. Welcome to them. Sorry, I've lost my place in Robbie's script momentarily. Yes, sorry, can I also introduce Alicia from IQEQ, who's sitting over there in the corner, who's our company secretary. Before we start the formal process of the meeting, I would like to just give a brief update and tell you a little bit about how we're thinking about the company today, and in particular, how we see things going forwards. And there are some slides to accompany this. So LMS is really very straightforward. There are kind of three elements to our balance sheet. There's what we call the mature portfolio, the new investments, which at the moment comprises our Dacian energy investments, and finally there's the capital that's still available for deployment. And so I'm going to speak briefly to each of those three areas. Turning first to the mature investments, this represents some 23 million, or about 47% of our net asset value at the year end. I'm going to reference our December year end numbers in all my comments. So this portfolio of 23 million dates primarily from the period prior to 2012 and comprises relatively mature positions, which we hold primarily with a view to providing liquidity to realization and providing liquidity for our new investment strategy in the future. There are 6 main holdings. I'll take you through those in a moment. By and large, this portfolio is managed by third parties, and we don't actually control the exits. However, what we do is we ensure that we maintain information and knowledge and dialogue with those managers, and that we use the influence we have to best effect. We keep under review opportunities to sell down these investments. There is always a secondary market for things, and we could sell these positions rather than waiting for them to be realised in the sort of natural course of their lives. Generally, however, this route does not produce the best financial outcome, and typically it's a route that we don't adopt, but we do give it active consideration. Portfolio as a whole is sensibly valued, showed unrealised gains of just under 12% last year. There are prospects for it to generate cash over the next 2 to 3 years and provide additional firepower for our new investments. So just a very quick sort of run through what the 6 main investments in this portfolio are. The largest investment on our books is MedHost. This is about an 8.5% holding of a US company that provides software management platforms to medium-sized hospitals in the US. It's a profitable company, generates around about $30 million a year of cash. As I say, we own 8.5% of it. The decisions on that and the management of that is largely driven by Primus, or a US fund and the biggest investor. But we talk to them, we talk to the management team, and that's a position which we expect to hold until it's realised. The next company there is ICU, which manufacture these reading glasses. Well, sorry, they don't manufacture them, they import them and distribute them in the US. Again, it's a position that we've held for quite a long period of time. The company is profitable, but is a relatively mature market, relatively slow growth, and we know the manager there is actively seeking some sort of exit or realisation of that business at the moment. And the other directly held, unquoted investment we have is Elateral. This is a small UK software company, which we've been invested in for many years. I think of the companies in our portfolio, it's really the only one that's been immediately and very obviously impacted by events in Ukraine, because they had a software developer, and they had outsourced some of their development work to software developers in Ukraine and indeed other parts of the world too. But they have taken quite clear and decisive actions to manage the risk that has crystallised for them. And we're currently looking at options to recapitalise or refinance that business. And then the other 3 large main positions we have are these 3 fund positions. Brockton has got 1 remaining asset in that fund, which is a very high-end central London residential development based in Curzon Street in Mayfair. The development itself is now nearing practical completion. It's due to complete in the next couple of months. I've got a site tour around it on Friday. They have started selling the apartments and will continue to do so. Full realisation of that development will take, I'm sure, another 2 to 3 years. But that's the remaining asset in that fund, and we would expect that investment to be gradually realised over that period of time. The next position, Lms Capital, this is a US early stage fund, which has really only 2 significant assets left in it, 2 significant investments. Both of those we expect to perform well. The fund expects to perform well. And actually, if you look at our 31 March net asset value update that we put out a few weeks ago, compared to the position that we reported at the year end, Opus is actually showing quite a big gain in value. So we have good expectations of outcome on Opus. And then finally, we have our position in Weber Capital. Weber Capital is a US specialist microcap fund investor. It's a business which LMS has had a relationship with for almost 30 years in one way, shape or form. I'm delighted that Gene Weber and his colleague Colin Hilberg are in London at the moment and are joining us for the AGM, and an opportunity, I think, to thank them for the excellent returns they've generated over the years. So that concludes my comments on the mature assets. So moving on to the new investments, we are delighted that our new investment in Dacian finally completed in November last year after an extended delay. Dacian represents about 15% of our net asset value. So just a quick recap on what Dacian is. Dacian is a Romanian onshore oil and gas production company, and it was formed with a view to making its first acquisition, which comprised the 40 oil and gas production fields, which it has indeed now acquired. It's led by a team that come from the oilfield services sector, and actually know these particular assets in previous incarnations. They have these assets have been their customer, so they know these assets well, and they in particular they have the know-how of how to optimize and get the best value from the acquisition. These are late life assets, which means that they've been already producing oil for a long time, and frankly they will probably go on for a lot longer, but on a diminishing basis. And our business plan with this acquisition is very much about bringing expertise to what are frankly unloved assets or non-strategic assets in the hands of their current owners, and using our expertise to nurture them, to frankly give them a bit of love and attention, to do maintenance and workovers on them, which just would not be economic for a very large their previous owner, big oil and gas producer. And how do we get this opportunity? It was brought to us by the team. The Dacian team is one with whom we've worked for a very long period of time in different guises, whom we know well and we trust implicitly. It was a very challenging asset to secure. It took the team, before we invested, it took the team at least probably 12 to 18 months to negotiate the deal. And then obviously we waited some 16 months for regulatory approval after LMS invested. And as well as our own investment, LMS brought with it, using our connections and our co-investment and address book effectively, we secured the additional funding that was required to finance the Dacian transaction in whole. But I'm pleased to say that having now seen the transaction conclude, I think we can say it was very well worth the wait. We're very pleased with what has materialized at the end of the day. So, they have now been operating for the best part of almost exactly 6 months, having taken over in November last year. So we had a small team of 6 or 8 people waiting on standby for that 16-month period, taking either reduced salaries or in one case no salary at all for part of that time. And they were sort of waiting to swing into action, which they duly did in mid-November. They had to take on 190 field staff, which was the staff that transferred with the business that we acquired. And we tend to discuss it as a portfolio of assets. It was actually a business segment of the vendor that we acquired. So as well as the assets themselves, brought the staff and the equipment and so on with it. So they took on 190 people. They sort of swung into action, took responsibility for the production. And this they'd achieved really by mid-December. They got there very, very quickly. The acquisition has been cash generative from day one. There have been some backlog maintenance issues they've had to deal with, because during that 16-month regulatory delay, the vendor had not really kept the maintenance up to scratch and so on. So there's been a bit of catch up there. However, compared to when we first looked at this deal back in August 2020 and committed to it, obviously energy prices have strengthened very considerably. So that all helps. Achieving production gains in the medium term, achieving production gains are the key to driving returns from this investment, and that process is well underway. So as I say, the sort of catch up on the backlog is happening, and also some of the program, we're starting to actually implement some of the program of real production gains that were always in the business plan originally. The target is to at least double production from where it is. In the medium term, there are additional opportunities to develop this portfolio. It's early days, but for example, there are opportunities, about 50% of the production is in the form of gas, which is quite heavily taxed. There are opportunities in some of the wells for us to actually convert that gas to electric power, at the wellhead and feed that power directly into the remaining grid, which brings you higher margins and in particular more stable pricing. So that is something which we will look at with the team in due course. We also have substantial land holdings with this acquisition, and that land has all sorts of potential uses, but in particular there are the opportunities to put some renewable solar panels on some of that land. So we expect excellent returns from this investment. And in addition to those excellent investment returns, then Dacian is now actually generating fee income for LMS on an annual basis, which effectively acts as operates as a credit against our operating costs and will reduce our cost ratio. And you'll see the benefit of that starting to flow through this year. So Dacian, I think, demonstrates many of the characteristics that we seek in all our investments. It's a team we know and trust, and it's a business we understand. That team has the capability to unlock exceptional transactions for us, or with us, and then to execute the investment plan. We often talk about hard to access assets. That's an expression we've used. I think this is Dacian is a very good illustration. It'd be difficult to imagine a harder to access asset. It's sort of small and fiddly, and it has a relative, it's valuable to us, but a lot of other people, it's too small for bigger firms. And therefore that enables us, we believe, to find more attractive entry pricing and potentially to create better returns as we go forwards. Also importantly, it's a cornerstone opportunity for us. As I've said, there are opportunities to do more with this portfolio, and also the opportunity potentially to acquire more portfolios like this. So it is properly a cornerstone investment for LMS, which will enable us over time to deploy more capital and to grow. We will provide a more detailed update on some of the nitty-gritty around Dacian's performance, barrels per day, and those kinds of things as part of our own half-year results announcement at the end of July or beginning of August. Moving on then to our available capital, we still have some 40% of our net asset value in cash waiting to be deployed. The board is conscious that in the short term this represents a drag on returns, and we're also conscious of the risks in an inflationary environment of having cash. However, at present we see our cash reserve as a strength, and one on which we are very focused on building and taking advantage of. So our approach to deploying capital is really, I would say, three things about that. First is to focus on where we have competitive advantage and be very clear to ourselves on where that is. I think to be prudent, balancing the opportunity, but also acknowledging the attendant risks. And finally, I think importantly to accept that our strategy can have a long lead time on occasions, and to be patient where it makes sense to be so. So in practice, what that means is that our two areas where we're most focused are energy and real estate, because we see those as the two areas where we really do have some competitive advantage. I think we're now able to talk about it with a tangible example in Dacian. So on energy, we are very pleased with the Dacian investment, as I've said. We work very effectively with the team to bring that home and support them during what was quite a difficult period. And we see there is an opportunity both to expand that investment and also to do similar, more further late life energy investments. So that is an important factor when we think about where we're going to deploy the cash that's still on our balance sheet. That's an important component. As I say, the other sort of pillar of what we think about is real estate. And we are cautious. You may remember that back in 2020, we talked about a potential sort of retail mixed-use high street kind of strategy with a team that we've worked with previously. We paused for thought on that in the light of everything that happened, in particular the high street in 2020 and with COVID and so And we are now looking at a more opportunistic strategy with that team. On the development side, we're still working with our development team on an opportunity which capitalizes on our real estate skills alongside others. But again, we are very cautious, and in particular, build costs are a big issue for us at the moment in terms of deciding, what you can pay for a site. What you can pay for a site is a factor of what you think you can realise it for, and the cost of getting there, plus your profit margin, obviously. So build cost inflation is creating significant uncertainty in making that decision at the moment. So again, we're proceeding with caution. In private equity, we've seen many opportunities, but we're really focused on those where there is some crossover either with our energy or with our real estate business. So, for example, we see lots of things, technology and all sorts of stuff comes across our desk. But last year we looked at a couple of industrial companies. Now, those two deals obviously didn't go anywhere, but we looked at them, and the reason we looked at them was because they had some crossover with our energy activities, and some of their customer base was some of the companies we knew well in the energy sector. So that was how we did the sifting, and that's how we decided to look at those two opportunities, and we decided they weren't the right things to do. But that hopefully gives you some sense of how we think about sifting those private equity opportunities. So again, we're being disciplined and focusing on where we have real competitive advantage. So in summary then, our goals, our aim in life is very much to steer this company in such a way that it delivers returns to its shareholders. We believe that the thing that will drive this, growing the NAV, narrowing the discount, and further reducing our cost ratios, are the investments we make. We remain very, very focused on delivering that strategy. Our priorities in doing this are to nurture our mature assets through to realization, supporting and cajoling the external managers where we can. As lead investor on our new investment in Dacian, where we hold 32%, supporting the Dacian team as it gets to grips with its business and explores opportunities to create that expansion that we would all like to see. And finally, as I've just mentioned, to continue very much with this group, the group of people that we work closely with, to identify opportunities to deploy further capital in our two core energy and real estate areas. So that concludes my comments on where we are. I'm very happy to take any questions at this point, if anybody's got any burning issues, or we can come back at the end. Michael.
Thank you, Nick. Well, first of all, people very rarely say thank you, but I'd like to thank everyone at LMS, especially yourself and the board and Robbie and Chris and everyone else, particularly for bringing back in-house the management as opposed to subcontracting it elsewhere. And congratulations on the timing of the Romanian purchase. You weren't to know what was going to happen to the oil price. I know you probably are unwilling to elaborate exactly how many barrels of oil per day the 100 wells are currently producing. Is it more than one or two a day, or?
Yes, I think I can say. I mean, we have always, it's around about 1,000 a day, which is sort of where we thought we would be at the start of operations. So because of the backlog of maintenance, we were a little bit below that, but we've now caught that back up. So from here on, we're sort of back on plan to grow.
Hinted that you were hoping to double that. Within Romania or by?
Oh no, within Romania, within this portfolio of assets, and these assets have been undermanaged, effectively and effectively by the vendor, because they're tiny, and Petron is the vendor. They're a tiny portion, minute portion of the Petron portfolio, and they just haven't had the attention. So our team, with their knowledge and skill base, believe that there are real opportunities to to increase production.
Do you think the team could use their expertise in other geographical areas, say Italy, where you had late life wells?
Yes, I think they could. I think they could. I think at the moment they are very much focused on getting to grips with this acquisition, but certainly the team has ambitions, and we have ambitions with the team to do other deals, whether in Romania or Italy or reasonably friendly jurisdictions, I would say.
I didn't dominate the question, but I've got a couple which still are in my mind. I think in the annual report in the past you've mentioned George Capital.
Yes.
And Caverna, I think it is.
Caverna,
property. Yeah. Are you still involved with them, or you were saying you're more cautious on the property development side?
Yeah, no, I'm happy to. Yes, we are involved with both. I said that we backed away from the sort of retail town centre strategy, which was what we were going to do with George Capital back in 2020. We are now looking at, I said we were looking at something that's a bit more opportunistic and a bit more nimble and able to take advantage of kind of whatever happens in this world. And that would again be with George Capital. So we're still working with them, but the structure and what we're aiming to do is slightly different. And then I talked about our development activities, which are very much still with the Caverna team.
So that they're still on board.
They're still on board.
Yeah. Yeah. Naturally, both you and us, the shareholders, would like to grow in value. How about growing in size? Have you thought or ruled out a rights issue or anything like that? Or is the discount too great, which makes that difficult or impossible?
We certainly haven't ruled it out, and we have, as one of our objectives, we actually have expanded, as well as growing it organically, expanding the balance sheet. I think the challenge for us at the moment is just the time to do that. So I think at the moment, with the discount where it is, we wouldn't do a rights issue, wouldn't be able to do a rights issue. One of the routes that we think about and we think may be viable, again, on the basis you can find a willing buyer and a willing seller, is, there could be the potential to acquire some assets, as long as we like those assets, for some kind of part for shares and part for cash. And that might actually be our route to start expanding the capital base of the business. Now, it'd be quite a tricky deal to do where we are in terms of discount, but I think potentially for the right seller who was keen to gain access to LMS as part of his sale consideration, it could be an interesting route to go down. Certainly not one that we're blind to, and we revisit it from time to time. So it's an ambition there for the next year or so.
My final point, which is kind of slightly different. It's a lovely day here in London. We are very lucky we're here well and safe. The people in Ukraine are far from well and safe. LMS Capital has the power to make charitable donations. I think in the past people have normally said it's up to each individual shareholder to decide whether or not they decide this or that charity. But I think in this situation, it's unheard of. I think we've entered a new world era post the Russian invasion of Ukraine. I hate to think how much and how long it will take to restore the infrastructure, as well as the damage done to all the good, brave Ukrainian people. And I do think it'd be nice to set an example if we at LMS Capital, as a company, then shareholders can do it individually, were to make quite a meaningful charitable donation to a number of Ukrainian-based charities. I'm quite happy to forego a large part of my dividend. I've already been supporting charities in Ukraine, but I do think the company should take a stand and perhaps encourage other UK companies to do the same. We're lucky, we live well and safe in London.
Yes, we do. You're absolutely right. I mean, you're right. Our position has always been, and as we sit here today, it probably is that we think that the right way forward is for our shareholders to determine.
But you might be able to set an example to other companies. I'm not saying that 80% of the money is allocated to next year's dividend should be a charitable donation, but maybe 10%. if it was just £50,000 or something, to encourage other companies who adopt exactly the same stand, saying, oh, it's up to our shareholders.
Yeah. Well, I think,
Shareholders are facing difficulties, as are companies.
Yeah.
But the people in Ukraine are facing a lot more than that.
I know. Well, as you've heard, one of our companies very directly.
Exactly.
In fact, I mean, they're safe in farming, frankly. So, pity the poor people in Romania. It's a dreadful state of affairs.
My point is just perhaps if it could be raised.
Can we? Let me
meeting.
say. Let's take that away and just reflect on that. It's a very well made point, Michael. Alicia, do we have any questions from the
No, we
web
don't have
stream at the
anything.
moment?
No, nothing in the platform.
Okay. Thank you. So I'm now going to move to the resolutions, if I may, which comprise the formal meeting of the business. Formal business of the meeting. The notice of, so I'm going to read this. The notice of the annual general meeting, together with the explanatory notes, was published and posted to shareholders on the 22nd of April. And accordingly, the requisite notice period of the meeting has been given. I therefore propose that notice of the meeting should be taken as read. To more accurately reflect the views of shareholders of the company, all votes for this AGM have been received electronically. There will be no voting by show of hands after each of the resolutions put to the meeting. Therefore, for each of the resolutions, it's considered that the polls are now closed. The summary of each resolution will be shown on the screen, together with a breakdown of the proxy votes that we've received after I put each resolution to the vote. The final results of the voting, including the proxy votes, will be announced through our regulatory information service and published on our website as soon as reasonably practical after the close of the meeting. So Alicia, are the resolutions going to pop up on the screen?
There are no slide decks for the resolution. I think you've got to bring them up on screen. Thank you. Just going to share your screen. That'd be great, Alicia. If you just bring up your PowerPoint, click on the share screen, and then select the appropriate window. If you just go into the view, slideshow view, perfect.
So, okay. So the first resolution is Muslim now.
Okay, so the first resolution deals with the annual report and accounts for the year ended 31 December 2021. I propose that the annual report and accounts for the year be received. Those in favour and those against are shown on the screen. I'm going to read those numbers out unless you wish me to do so. I therefore declare the resolution carried. And now come to the next resolution is to approve the annual report on directors' remuneration. I propose that the remuneration report be approved. Those in favour and those against, and as you can see again the numbers are up there for you to see. I declare the resolution carried. The resolution to approve the final dividend is the next resolution. I would like to propose that a final dividend of 0.625 pence per share be declared and payable to registered members as of the close of business on 27th of May 2022 in respect of shares then registered in their names. And again, the numbers in favour and against are on the screen there for you to see. I declare the resolution carried. Resolution to re-elect directors. The board is recommending that Robert Rain be re-elected as a director. And again, the numbers in favour and against are on the screen there. I declare that resolution carried. Resolutions. The next resolution relates to the re-election of Peter Harvey as a director. Sorry, I've jumped around this. Yeah, beg your pardon. Peter Harvey. And again, the numbers, the votes are there on the screen for you to see. I declare the resolution carried. Resolution 7. Oh, you're going to Resolution 7. Sorry, at some point we've got to jump back to me and I have to hand the chair over. That's why we're hopping around here a little bit. Resolution 7 relates to the election of Graham Stedman. And again, as you can see, the votes there recorded on the screen. I declare the resolution carried. The next resolution relates to the election of Jamie Wilson. And again, the votes are there on the screen. I declare the resolution carried. So at this point, I should just formally hand over to Jamie, who will go through the process in respect of here. I think we're back on resolution 5 this year.
Yeah.
Good morning. I'd like to address resolution 5 to re-elect Nick Friedlos as a director, and the votes are on the screen. You'll see them, and I would, based on those votes, the motion is carried. So let me have you back. Thank you.
We now come to the resolution to reappoint the auditors. I propose that BDO LLP be reappointed as auditor of the company to hold office until the conclusion of the next general meeting, at which accounts are laid before members. Again, the votes are there on the screen for you to see. I declare the resolution carried. I further propose that the directors be authorised to determine the auditor's remuneration. And again, the votes are on the screen. And I declare the resolution carried. The next two resolutions deal with the allotment of new shares and the disapplication of preemption rights as explained in the notice. These are sort of relatively technical resolutions which we include every year. Resolution 11. Sorry, I've lost my place again. Resolution 11 and 12. I think we'll take together. The votes for both are on the screen. We'll just show 12, please, Alicia. I declare those resolutions carried. Resolution 13 gives the company authority to buy back its own shares, subject to certain limits, as explained in the notice. I propose that resolution 13 be passed as a special resolution. And again, the votes are there on the screen, and you can see that as a special resolution. The resolution is carried as a special resolution. The resolution is carried. Resolution 14 gives the company authority to call a general meeting other than an annual general meeting on 14 days clear notice. Again, the votes are on the screen, and I declare that resolution carried. So that concludes the business of this meeting. Thank you all very much for your interest and participation, and now declare the meeting closed. The final results will be published on the RNS regulatory news service as soon as practicable after the meeting, which probably means later on this afternoon. Thank you all very much for attending, and do join us. I think we've got some tea and coffee and possibly even some chocolate biscuits.
That's great. Thank you to the board of LMS Capital for your participation today. Ladies and gentlemen, please could I ask you not to close this session, and we will now automatically redirect you for the opportunity to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be most well received. On behalf of the board of LMS Capital Plc, we'd like to thank you for attending today's annual general meeting. That now concludes today's meeting, and thank you to you all.